You find the perfect apartment. The rent fits your budget. But before you get the keys, the landlord needs to check a 3-digit number attached to your name. That number is your credit score. That panic drives them toward predatory, quick-fix schemes that charge high fees for things you can do yourself for free. To improve your score, you first have to identify your starting line. We are going to look at 3 specific paths: the blank slate with zero history, the rebuilder, recovering from past mistakes, and the optimizer, preparing for a major loan. Generic one-size-fits-all credit advice fails. The mathematically correct action to take depends entirely on which of those 3 starting lines you are on. This pie chart shows exactly how bureaus like Equifax and TransUnion calculate your score. It breaks down into 5 factors: length of history, credit mix, new credit, payment history, and utilization. Spending time trying to optimize the 3 smallest factors yields minimal score growth for the effort required. To actually move the needle, you apply the 65% rule. These 2 highest weight metrics, payment history and credit utilization, control the majority of your score. Payment history is straightforward: pay on time. Credit utilization is the percentage of available credit you are currently using. If you have a $1,000 limit, maintaining a balance below $300 keeps you under the recommended 30% maximum threshold. Controlling these 2 high-weight levers requires strict monthly discipline, but executing on them is the only mathematically guaranteed way to force your score to grow over time. If you are a newcomer to Canada or a young adult, you are likely on the first path, the blank slate. You cannot get approved for standard credit because lenders have no past behavior to evaluate. This flowchart illustrates the most reliable workaround: a secured credit card. You deposit personal cash as collateral to guarantee approval. That deposit becomes your credit limit, and each monthly purchase and payment you make is reported directly to the credit bureaus. An alternative tactic is becoming an authorized user on a parent or trusted family member's account. Their established positive history gets added to your credit file instantly. The trade-off is shared risk. If the primary account holder misses a payment or maxes out the card, your score suffers that exact same damage. A blank slate's only objective is to establish a safe baseline. Every on-time payment builds your history. Consistent use of a secured card can typically result in a 700+ score within 12 to 18 months. Path 2 is the rebuilder. If you are struggling with negative marks, late payments, and a poor overall score, your strategy shifts entirely to recovery. Your highest return on effort is pulling your free reports directly from Equifax and TransUnion. When you find actual data errors and dispute them, the bureaus must remove them. That gives you an immediate score jump for free. This timeline outlines the harsh reality of accurate negative marks. A late payment drops at year 0. You cannot erase it. It will remain on your report for up to 6 years, though its impact shrinks as it ages. Avoid credit repair companies that charge heavy fees to dispute items. They have no special legal power to erase accurate history. You are paying them to mail the exact same free forms you can submit yourself. You cannot buy your way out of bad data. Rebuilders must accept the trade-off of extreme patience. You have to let time pass while offsetting those past mistakes with perfect current payment behavior. The final path is the optimizer. You already have a score over 700, but you want to qualify for the most competitive interest rates for an upcoming major purchase, like a mortgage. This graph compares a standard utilization rate against an optimized one. While 30% is good, temporarily suppressing your utilization strictly below 10% in the months leading up to a loan application triggers peak scoring. Executing this tactic requires cash flow discipline. You must prepay your credit card balances before the monthly statement date even generates, so the bureau see a near zero balance. You also need to control hard inquiries. Actively applying for new unrelated credit cards signals you are seeking more debt, which temporarily drains points from your score. For optimizers, these micro adjustments require strict focus. But that focus translates directly into thousands of dollars saved over the life of a long-term loan. Regardless of your path, defensive monitoring is a necessity. Free Canadian tools like Borrowwell and Credit Karma let you check your numbers ongoing. It helps to differentiate between inquiries. A hard inquiry happens when a lender checks your file to approve new debt. A soft inquiry is a routine background check or a self-check. Checking your own score is always a soft inquiry. It has absolutely zero negative impact on your number. Regular monitoring is your first line of defense against identity theft. It catches unauthorized accounts before massive bills go to collections. Proactive monitoring allows you to spot structural issues and fix them from a position of strength, long before you are sitting under pressure in a lender's office. The overarching role of credit comes down to this: you cannot control the flow of time, but you have absolute mathematical control over your utilization and your payment history. This matrix summarizes your next steps. Blank slates. Open a secured card, set autopay, and wait. Rebuilders. Dispute errors, aggressively pay down utilization, and ignore repair scams. Optimizers. Freeze new credit and suppress balances to under 10% 6 months prior to purchase. A credit score is not a mystery. It is simply a formula. Identify your starting line, pull the correct levers, and your score will predictably rise.